Hey there, this is Tricia with Easy E-mini Trade, and today I want to go over what you can do when the market is chopping sideways, and you can decide if you can feel comfortable adding it to your trading plan or not. And I'll show you some slinkies that set up this morning as well. On Thursday, the 5th of May at 7 p.m. Eastern, I will be having a Slinky Advanced Techniques webinar, and I'll go over the Slinky in full detail, including filtering out with a larger time frame, tick frame chart, and show you some advanced entry techniques. And if you're interested in that, you can go to my site, easyeminitrade.com, and choose the webinar tab at the top of the page, and all the information is there. So what you're looking at is the NQ. This is for today, Monday, April 25th, this morning. And on the top part here, I have a 4-range chart. That's what I like to take entries from. You can use whatever you like. And then on the bottom part, I have an 8-range. And all I'm interested in on the 8-range are the double stochastics that we use to filter out the slinkies off the 4-range. It basically is to keep us out of trouble as best we can during sideways chop. So like you see these little white lines, because on the bottom here, I have it set up so anything I do on this 4-range, it'll draw on my 8-range, so that's why you see all these little white dots there. So just care about the double stochastics on that. So this is this morning. What you're looking at here is yesterday's, actually Friday's close and the pivot point. And then I like to put a 90 EMA and a 200 EMA on here, as well as 50% fib retracement, both for Globex hours and regular trading hours. And I will take divergence trades at reference areas expecting them to hold, or if price wants to establish support and resistance and it holds, I will take those types of trades in those areas as well. So here at 9:39, you can see we're trading higher up into our close and our pivot point from Friday's close. Well, we've got higher highs on price, we've got lower highs on the stochastic, and this is just a regular old stochastic, settings of 14, 3, and 3, and I'm only drawing the K line. I'll tell you what the inputs are exactly, because yours might show up in a different order than mine, but fast K is 14, fast D, slow K is 3, and slow D is 3. My oversold is 20, my overbought is 80, and I'm only drawing the slow K line, and that's just for this stochastic. That has nothing to do with the double stochastic here on the 8-range. So I come up to resistance, I have divergence. You could be very aggressive and take it as soon as you see divergence. I tend to be a little more on the cautious side. When the stochastic rolls below 80 here, I get in a tick under the bar that's forming when I get that. And if you're taking those types of trades, you always want to be aware of where is it going to likely hold when it comes back down. So in looking at this, you have a couple options. The 5-minute high-low area is this highlighted grayish box here. That often will hold as support and resistance. I've got the 90 EMA, which often holds as support resistance, the 50%, the 200. So what would be going through my head on this one is I would use the 90, and then if I can get through the 90, then I would be looking at, testing this area down here. So you can just pick a target and just get in and get out, or you could try to trail. I will tell you that if you're doing divergence trades, realistically you're not going to have a whole lot of room likely for a runner, so you might want to keep that in mind. And then here, as we're bouncing off that 90 EMA, you can see on price we have lower lows here than here. We get divergence because we have a higher low here than here on the stochastic, and this is the bar that's forming when that stochastic crosses above 20. So you could be very aggressive and get in as soon as you see divergence, or wait for that stochastic to get above 20. You enter in a tick above this bar here, and you know that your target area is going to be that area where you've got the pivot point and the close. Once you get up the top there again, you have divergence to the downside. We know it's resistance. We have higher highs in price right here lower highs here on the stochastic, so I can get in once the bar that's forming as the stochastic gets below 80 forms. I can get in a tick under this bar here. Now I have a second super trend stop on here. I won't go into what we do with that. I'll show you that next Thursday at the webinar. But John R. turned us on to that, and it works out pretty well. But we'll talk about more of that next week. So again, once it comes down to this area here, I don't have divergence again down here. And keep in mind that we're going to be having news at 10 o'clock. So if you're going to do these types of trades, I would be very well aware of when the news is coming out, because the fact is we don't know if support and resistance areas are going to hold on news. So you definitely want to use a little bit more caution. This was a slinky that set up at 947 here as well. This was at 942. This was a slinky into resistance. So if you did it, you got stopped out. A lot of times those will still pop through just enough and then pull back. So you know, we have days where it will bust through everything, and then other days where the slinky will hold up on all support and resistance. So this 947 trade, 8 range agreed on that, and if you look over here, you can see our green line is below our red line on our double stochastic, so we're good to go. And we're getting a dipsy doodle here, and that's just a name that Gordon gave it when that green stochastic comes up, almost kisses that red one, and we're getting a setup that's usually pretty powerful when we get that. And then the other one here at 942 was right here. It was valid for a buy because we were still in overbought with our red line. So, and I'll explain all that next Thursday if you're not familiar with it. So then we get down to this area here. We have news at 10. I put that on here just so when I look back I know what was going on. And it's holding support, holding support. So I'm not really too interested in trying to buy off the support area because I don't trust at 10 o'clock that it won't bust through here. So that's a pass for me. And then here we do get, just after the news comes out, we do get a slinky set up, and it's valid. Here's the double stochastic at that time. Green line's above the red line, so we're good. And the only time that we would be cautious about taking that as a buy, even though the green line would be above the red, would be if our red line was in oversold, we're only going to take slinky shorts, and if our red line is in overbought, we're only going to take slinky buys, regardless of what the green line is doing. Okay? So now, you know, news comes out, and now we have to wait for it to get to an area of support again in order to, you know, have a way to get in, or you can anticipate the bounce. Here, I'm not interested in doing anything short because it did not get up to resistance. In order for me to want to take this as a divergence trade short, I have to have divergence first off, which I don't. But let's say that we did. I'm not up at resistance, so even if we had divergence, I'd have to pass on it. I'm only interested in taking divergence trades if I'm at support or resistance, period. Because if you're in the middle of nowhere and you get divergence, it may only be a bar or two retracement, so not interested. So we know that we've got support here because remember back here just prior to news, so we've got support. It's holding once again, same area that it held back here. We've got divergence. We've got lower lows in price, while I've got higher low here than here on my stochastic, so I could go ahead and buy that. Now if I am buying this, I'm looking at this area as the area where I might get stuck because now I'm under the 90, I'm under the 200, I've got my 50% fib retracement areas right there above my head for Globex and regular, so I would use that as my target area or tighten my stop once price got up there because I don't know that it's going to get through here again. So you can see it doesn't, so that would again have to be your target area. Now as it approaches support again, I don't have divergence, but even if I did, I would not be as interested in it because now I don't have a whole lot of room up here above me. We know that this area held here, so now I have to assume that it's probably going to hold again. We do get a slinky at 10.12, and that works out okay as well. Right here, get closed under our super trend stop, and here's our double stochastic. Our green line's under our red, so we're good to take that. And I'll generally try them, even at support or resistance, I'll generally try them once, and then if it fails in that area, then I won't try it again. So even though I have support here, I was willing to give that a shot. And then I would just be looking for the next area where I can expect a bounce or a pullback off resistance. So I'm not willing to try this here at 47 just yet, because this is our first test of this area after the open at 9:30. So I really don't know that it's going to hold there or not. Even though we have divergence, like I said, I'm not willing to try it because, like I said, it hasn't tested that area until here. So you know that it wants to hold. So next time in that area, if I have enough room up to resistance and I get divergence, I can try that as a buy. I don't really have anything here I'm really willing to do. Here I get a slinky at 10:33, and you know, up to you obviously if you want to try it. And in taking it, I would be aware of, you know, the fact that I might get stuck on the 90, which falls right in line with this area here to the left where we created some resistance, and then here where we created some resistance as well. But in taking this, I would look at it and say, okay, if I can get through this area, then I'll probably get up to that 200 and then back up to this resistance area at 54.25 and then up to the 50%. So 8 range agrees. You can see right here, it's at 10:33, green line above the red. We're just coming out of oversold. And the thing is that I'm using that Sierra that you're looking at. This is Ninja, and Gordon did an indicator for us for people using Ninja, where it will tell you what you're looking for based on where the green line is, which helps a lot. The only thing is if you scroll back, this gives you the current condition in the text right here, so that won't change, but you'll notice here you can see the green line above the red line. So at that time it would have said longs. So it'll say longs OB. If the red line's in overbought, it'll say longs, and it'll say shorts and shorts OS for oversold. And then using some of the advanced techniques for entry, you can see here we get a little one of those dipsy doodles here. That's what Gordon called it, and it'll put an arrow on here. It's actually 2 separate indicators that he did that are available if you're interested in them. Very reasonably priced, and it makes it a lot easier to spot. But here, this is an advanced technique as well. When we have like 40 points worth of space between the 2 stochastics, that can benefit us as well, and as well as this heads up on a dipsy doodle. And if you're interested in those, you can get the info on my site. It'll say at the top Gordon's indicators or Gordon's stochastic indicators or something like that. And then basically you're just waiting. You're just waiting for another opportunity, either off resistance or off support. So here we get a pop up to the 50% area. And you can see we've got divergence. We've got higher highs on price. We've got lower highs on the stochastic. You wait for the stochastic to get below 80. This is the bar that's forming when you get it, and you take it, and you know that you've got some issue below you here at the 200 and the 90, but if you can get through there, then you'd be looking over here. You're always looking to the left. Where's the last spot that it held? So this one would be a little bit more on the risky side because this could easily bounce off this area. So you would be aware of that in taking the trade. And then, like I said, holds the support area, the 5-minute low spot. Slinky here at just about 11 is 10:57. We know we've got support at 47, so we've got plenty of room down there to take it. And I think this actually, sorry, this 10:41 was also a slinky as well that the 8 range agreed on, and that one into resistance did not work out. So again, just depends on if you are willing to risk it into the resistance area. So if it's really strong and it's been holding and holding and holding, I will be more cautious. Like I said, if I try it once and it fails in a congested area, then I'll wait for it to get out for those slinkies. Especially looking at the daily. When you look at the daily chart and you see that we've got all this congestion here to our left, this is all relevant even now. So this was, before last week, I guess the week before last, and we spent a lot of time in this area creating lots of support and resistance. So it's still relevant. Whenever you find your way back to those areas, it's relevant. If it's a week from now, a month from now, a year from now. So I hope that is helpful for you guys. Here as well, like I would view this as a failed breakdown attempt. Like it tries to get through support here, but it fails because it popped right back up, and you do get divergence. So once it comes back above that 47 area, you could go ahead and buy it. We do get this slinky at 11.12, and again, you just would have to decide if you were willing to give it a shot into the area of resistance here with the 90 and the 200. It does eventually go. Takes a little while, but it does eventually work out. And same up here, going sideways. This is around 11.30. Holding this area where our 50% retracement areas are. This we were talking about as a possible breakdown under this area here, but not a great spot that I mentioned in the room because we have that 90 and 200. Too much junk here for a breakdown or a breakout. You want to have room for price to move if you're going to take those. But the good news is that you do find that you do get some divergence here. Whether you look here, you could see you've got equal highs here while you've got lower highs on the stochastic. You could take it under this area here, and you never get stopped out on the bounce there, and you're sweating it out, but your stop holds and then it does go on. Or you can see that you still have divergence here. Got higher high here than here, and if I go here, you can see I have a lower high here than here. So you could take it off of there. Again, you got to be aware of this area below you that might hold, and then if it can get through there, then you're looking at the 5-minute low area, and then if it can get through there, then you're looking at 47. So that is the key. Always look ahead and have an idea of where price might hold up based on previous price action. If you can't see it on your entry chart, look at it on a bigger chart. This is a 2-minute chart. You can see just common areas here this morning. Pop through, couldn't go, pop through, couldn't go, pop through, couldn't go. That area holding right there. Same here this afternoon. This morning we were having trouble there, so you might decide to try it in those areas this morning. Here in this area right here, you can see all this congestion on the price bars here. You can see here it tries to pop through and it fails, and then that area is holding, holding, holding. So you can get a good idea of where support and resistance are looking at a bigger chart. I like to pick mine out first thing in the morning on a 15-minute chart, but if you see that you're sideways, just figure out where those repetitive areas are and then look for divergence and buy support and sell at resistance. Okay, you guys, I hope that you find that helpful. If you have any questions, feel free to send me an email. Take care, you guys.